Capital and Counties Properties has agreed to a new 5-year £70 million revolving credit facility with the BNP Paribas and HSBC Bank secured on certain assets at Covent Garden. The facility is Capco's first RCF and establishes a more flexible financing structure. We're chatting now to Capital and Counties Chief Executive Ian Hawksworth for more on this and of course the group's plans going forward. Of course, Capco is listed here in South Africa and on the London Stock Exchange. Good to have you with us. Ian, let's kick off with the views on overall, firstly, how your portfolio of assets is doing. I know Covent Gardens with assets of £808 million is accounted for about 50% of the portfolio. So tell us about the developments at Covent Garden and why it seems to be doing quite well.
Covent Garden is now established as one of the most important retail destinations in London. We've really rejuvenated the place over the last 3 or 4 years. So we're enjoying much better brands and that's attracting high quality consumers who are continuing to spend money. The food and beverage that we've announced today, we've got several new restaurants opening, including Jamie's Union Jack's, which is a Jamie Oliver brand. You know, they're trading tremendously well, and I think that will continue with the Queen's Jubilee and also the Olympics this year. So
a lot of excitement, as you say, around the Olympics, and that will put a spotlight on London. Let's move on and take a look at the Earls Court region. Assets there valued at £574 million. Tell us about the vision that you have for Earls Court right now and how this master plan is working out.
Well, Earls Court the exhibition business sits in the middle of what's called an opportunity area, which is a very important part of London that the authorities have slated for comprehensive development. So we've made applications for the area for 7,500 new homes and several million square feet of commercial development. So we're expecting that those applications will be heard during the course of this summer, and we're looking forward to being able to participate in the development thereafter.
Once this development comes into play, what does it mean for Capco? Tell us about what the Earls Court assets will do for your overall portfolio.
Well, it's a very significant development opportunity, and I'd expect that with planning consent we'll see an uplift in the valuation of the underlying land. And then that will give us the opportunity to participate in development of that area over the coming years. The residential market in London has been particularly strong over the last 2 years. There's an acute shortage of housing in central London, and there's tremendous overseas buyer interest in anything that's of high quality. The first phase of Earls Court has actually got planning consent for about 800 new homes, and we'd be expecting to launch those at some point in the next 18 months or so. So this is a significant opportunity for us, an immediate uplift in valuation, but a long-term opportunity to participate in development profits.
Very interesting, as you say, that people coming in to buy property right now, perhaps at depressed prices. Is that it?
No, I don't think it's depressed prices. I mean, pricing for residential has gone up quite significantly in central London. It's just that there's an acute scarcity of high-quality product in Zone 1. Zone 1 is the primary addresses, and Earls Court sits within the Kensington-Chelsea area. So I think given the domestic demand, but also very strong interest from all around the world in ownership in central London, the demand profile long run for residential in central London is very good.
Okay, let's look at the financial position of the company, because you came out today saying that you've secured the £70 million revolving credit facility. That's, of course, from BNP Paribas and HSBC. That on top of the £300 million refinancing that you secured late last year. So how does this put the Capco Group in a better financial standing?
Well, we're very well financed. I mean, the debt markets are still very tough in Europe, but if you've got high-quality assets and you're a high-quality sponsor, you can secure financing at very appropriate prices. So what we've done is taken the opportunity to extend the loan facilities on Covent Garden, which gives us flexibility to make further investments in the area. That's extended the loan profile of the business out. Now, maturities on average are 5 years. The interest rate position, the cost of the interest rate is around 5%. And the loan-to-value ratio within the company, or what you would call gearing, is about 25%. So we're very well financed with those facilities and with cash and available facilities now of £250 million on hand. So we're very well positioned at the moment.
Tell us about your plans in China, because you also have a small stake in assets on that end. You've got investments there worth around £13 million right now. Are you looking to further grow into China or in that region?
Well, the focus for us is London. I mean, the vast majority of our assets are in Zone 1 central London, and Covent Garden and Earls Court really form the core of the business. But we've had a very interesting experience in China over the last 4 or 5 years working with China Resources, who are one of the largest companies there, where we've been invested in 2 real estate funds which have invested nationally. Both of those funds are now coming to the end of their lifetime, and we've made very strong profits out of our involvement there. It's not a priority for us going forwards, but we're always interested in making money, and we've got a very good relationship and experience in that market.